Todd Barlow, CEO and MD of Pattinson. Welcome to TMS Insights.
Thanks very much for having me.
Thanks for your time. A good time to be CEO after record results, Todd.
Yeah, absolutely. Yeah, we had all of our major companies giving us an improved contribution on the prior year, but the most material was clearly New Hope with a turnaround in the coal price, so that helped a lot. Our regular profit, which is the thing that we look at as the underlying basis of our business, was up 60%, but the statutory profit was up more than double. So the big non-regular gainers for us was our investment in Hunter Hall and Pengana, which we merged and pretty much doubled our money in the last 12 months on that. So that was a good profit for us. Yeah,
no, excellent. And Todd, you've been in the role for a little over 3 years, but a long time with Pitt Capital Partners.
Yep.
How are you enjoying it?
Yeah, I mean, it's been a great group to be involved with, and 10 years advising the group in their investment bank.
Yeah.
3 years as the CEO of the group, which has been a fantastic experience. I think we've achieved a lot in the last 3 years. We went from circa 8,000 shareholders when I joined to about 18,000 today, and that number increased 20% in the last 12 months alone. The other thing that I think has changed a lot is the market interest in the stock. We've had daily liquidity increase about 8 times in that 3 years. So the benefit of that, of course, is we've been able to go in the ASX 300 index in March, and then just last week we went into the ASX 200.
Yeah, no, wonderful. And all that's come on the back of a prolonged history of performance, really, from Pats going back to over 120 years ago.
Yeah, absolutely. Yeah, I mean, one of the things that I can talk about some of the short-term things that we've been able to achieve, but one of the things that constantly amazes me is just the long-term growth of the total shareholder wealth over. I mean, we put up stats there for the last 40 years, and that indicates 16.8% growth year on year for 40 years. So $1,000 in 1977 is worth nearly $500,000 today, which is just extraordinary growth.
Outstanding, and it makes it a bit hard looking forward sometimes. Do you get burdened by that history, or is it something that you're very proud of?
Oh, I mean, I'm certainly very proud of it, and it's a key message that I like to say to people, that this is a group that has adopted a certain investment style and method, and we're not trying to change any of that, and so it's been successful in the past, and we hope it'll be successful in the future, but it is extraordinarily high returns, and it's going to be a tough ask to keep that going, but I think if we can keep going the way that we've been going and making the same kind of investment decisions, we should be able to continue.
And the reality of it is that opportunities exist all the time, don't they?
Absolutely. I mean, even we have such a short-term focused market that you do something and people forget about it 6 months on and they don't want to talk about it anymore. But March 2016, so just over 18 or about 18 months ago, we deployed $900 million into a coal asset, which was really bottom of the market stuff. It was the coal price was below $50. It's recovered now to nearly $100. And the market was sort of turning off coal, but now everyone's quite interested in it again, and it's made a lot of money for us in the last 12 months alone.
And you're talking about Bengala, which is near Muswellbrook, which was, like you said, 2 years ago, and maybe that was the big ingredient behind the great New Hope result?
It was definitely part of it, because we had increased volumes on the prior year, a whole 12 months of contribution from Bengala. But Bengala was a profitable mine even at the coal prices that we saw at the bottom of the market. But it's really the recovery of the coal price that's been the biggest benefit for us.
So you're right. I mean, to me, that was an iconic Pats deal. We've seen them over 30 years that I've been watching the stock. These big occasions when the market's very in one direction and the contrarian approach. Rio was a seller then. It was a good asset. To have bought it and seen what the thermal price almost double in that time shows that touch is still there.
Yeah, I'd like to think so. I mean, I think that the timing couldn't have been better. I mean, it was absolutely the bottom of the cycle, and it was an unsustainably low price. Most of the cost of production for decent quality coal in Australia is above $70 or $80. So you can't have a market where people are operating mines unprofitably. And then you have to turn to the underlying demand. Is demand coming off? And there's some people who were suggesting at the time that that coal's demand would end and people would switch off to renewables or other sources of energy. But it's simply not true. I mean, people tend to focus on their own market, and there's a lot of focus on the Australian electricity market at the moment. But where we look at is the global market and global demand, which is for a commodity, and more importantly, what's happening in Asia, because that's where the coal that Australia produces goes to. And about 97, 98% of New Hope's coal goes to Asia, and all of Asia is choosing coal. Some of the graphs that we have in our presentation that we put out last week indicates the incremental growth in new coal-fired capacity going into Asia, and these are 25 to 40-year economic lives, and so that's where the demand for coal is going to come from.
Just that asset itself, Wesfarmers still on the register. They've indicated a willingness to maybe leave that investment. Any interest in that or something else?
Well, we have interest in any asset that comes to market. We'll take a careful look at what becomes available. We'll ensure that it's a good quality asset, and that the price is right. So obviously, Bengala is 40% owned by Wesfarmers, so we know the asset very well. We're very comfortable with it. So it's really just a matter of if the price is right, we'd be interested.
Okay, and moving on to Brickworks, a good result. There were factors again, I guess. Cyclone Debbie was an issue. WA is still pretty flat. Yep. But it was a good result.
Yeah, I mean, it was a record result, helped a lot by the contribution from Pattinson. The building products result was a little bit off, but as you said, that was related to a couple of key issues, which I don't think will be repeated, and Cyclone Debbie was an issue. The headwinds for the business in the future are the higher energy prices, but because we're getting so much demand at the moment for the products, the price rises are quite effective at passing on some of the increases to the input costs.
In the presentation, I think Lindsay Partridge said gas costs from last year to next year will be up in the order of about 48%, which that's shocking to anybody running a business so dependent on gas. How's that going to be managed?
Brickworks has been able to see this issue coming at them for some time, and it's very frustrating that Lindsay was down telling the federal politicians 7 and 8 years ago that this was coming, that the gas crisis was coming, and there's just been no action. So he's taken a number of steps to look at diversifying his supply capacity, and they've looked at things like landfill gas and natural gas and things of that nature. But ultimately you can't avoid it, and hopefully it corrects itself in time. In the meantime, you've just got to factor it in and get on with business. And
do you think it can be passed on, that level of rise?
To date, he's been doing it effectively, and there's been some very strong growth in prices that he's been selling at, and that's really a function of the fact that he can't produce enough. I mean, this is very high levels of demand for bricks at the moment.
And the property trust has grown into something really substantial.
Yeah, that's another key feature of Brickworks' result, was the further land sales into the trust. The trust value to Brickworks, the equity value is circa $500 million. And the other thing that's really interesting about the trust is the dividends that they get from the trust are now quite sustainable and growing, because you get sort of CPI or more increases to rents. So the great benefit of the property trust and Brickworks' investment in Sols is that those two things virtually underwrite the Brickworks dividend going forward.
Yeah, that's wonderful. Switching pace, TPG. It was a tough year. How would you describe TPG's positioning right now?
We're actually quite, as you'd expect from our side of the fence, counterintuitively quite excited about TPG. The share price has halved in the last 12 months. But we think that would be a little bit like saying that Amazon should get marked down in the retail sector. Right. I mean, Amazon's the disruptor in the retail sector. and I think TPG is the disruptor in the telco sector. So the problems that are happening to the telco sector are the problems for everybody else but TPG, because TPG is the lowest cost operator of broadband, and as people migrate to NBN, it becomes a level playing field. So really it comes down to what is your cost of administration, support, billing on top of the NBN charges, and I think that being low cost, TPG will always be able to offer either the cheapest plan or the highest margin product. So we're confident that they'll be able to remain competitive and make good margin. I think there's no doubt that the NBN is creating some pressure in terms of margins, and the guidance that TPG is given for the next 12 months is that they will be a little bit down on last year's result, but I think that's pretty good considering the headwinds created by NBN. So really for us, it's just a matter of weathering this NBN storm for the next couple of years, and then after that, the entry into the mobile is very exciting for us.
If you look back a year or so ago when the share price was double today's price, more or less, is it fair to say the market underestimated the difficulties of the NBN?
I think they did. I think there was a perception that it could continue to grow in a way that it was growing, and that was obviously going to stop when NBN started to kick in. But then I think the market's gone too far the other way now, and they're very pessimistic about the entire sector. And we have to have a profitable telecommunications sector. That's the reality of it. And it's a sector that's growing. I mean, people's consumption of data and voice is growing all the time. So we like the sector. It's just a matter of finding the right way to make good money. And I think mobile is definitely a really good move.
I get that there's a long-term focus, but we all have to live in the short term as well. And knowing what has been going on with NBN, was it the right time for Australia and Singapore Mobile to kick off and be invested into?
Well, I mean, it was the NBN that necessitated those moves, really. I think Singapore was a bit more of an opportunistic move by TPG because the Singapore government wanted a new entrant. They really facilitated a cheap entry point and a lot of assistance to go into the Singapore market. But the entry into the Australian mobile market was a necessity to deal with this issue of the NBN creating margin pressure back home. And the mobile provides an opportunity for TPG to utilise its very extensive network of infrastructure, which was somewhat being stranded by the introduction of NBN.
Yeah. And so how long does a shareholder wait? Soul Pat's, decades maybe, but for the TPG retail shareholder, what's the 3 years? Yeah,
I don't think you have to wait until... it's sort of a circa 3-year period before TPG physically starts getting revenue from its mobile entry. But as you know, in markets, you don't necessarily need to wait until the revenue occurs. The market will start seeing that TPG is effectively rolling out its platform and its network. It's doing so in a cost-effective way, and the capex is not blowing out. And I think you'll start to see some re-rating of the stock as it gets closer to the date when it can start attracting customers. But in the meantime, if you look at the price today, it's sort of 10, 11 times PE stock. You're not having to take a big punt on the future. You're getting a pretty good valuation right now.
Yeah, and the lower dividend that TPG paid to Sols, etc., made up through the various other increases and the New Hope extra contribution, for example?
Yeah, that's a key point because it's something that we value very highly is the consistency of our dividend, and this year was the 17th straight year of increased dividend, which is something we're very proud of.
Brilliant.
And the reduction that we saw from TPG, whilst we think it's a very positive thing that they're reinvesting in their business, and it should be distinguished from the other dividend cuts that people are having because their earnings are coming off. We think it's a good thing.
Such as Telstra?
Yes, absolutely. Yeah. So we think it's a good thing that TPG is cutting its dividend, but it does create an issue for us from a Sols perspective that we need to manage our cash receipts so that we can ensure we pay higher dividends. And we're lucky because New Hope is a much more stable and much higher cash contributor these days, and we think we'll be able to manage ourselves to make sure we keep increasing the dividend.
Shareholders will love to hear that. That's great. Todd, API, it had performed very well. I noticed Sols had sold out of what was, an historic holding, really. The business did have a bit of a downgrade as well. How do you see that now?
Yeah, I think API is a fundamentally very strong business, although it is operating in an environment where retail is doing it a little bit tough. So the fact that API is continuing to perform, I think, is a really strong sign. It's also generating really good cash. So we've seen API go from a position of having a reasonable level of corporate debt to now being effectively debt-free. And that's sounding in higher dividends. So we're getting some extra contribution from API as well. And its balance sheet is so strong, and its position as a retailer and its experience as a retailer is so strong that it's made no secret of the fact that it's looking at other acquisitions. And there was one that was publicly disclosed a couple of months ago, which was disappointing for them to miss out on, but it also showed that they were being very disciplined about the price that they were willing to offer, and that was of great comfort to us.
Chemist Warehouse had a big impact on the industry a bit?
I think from an industry perspective, yes, but I think the way API sees it, that Chemist Warehouse is very much your discount retailer, and API is slightly a more premium product. So, I think Chemist Warehouse is a wildly successful model, but so is API, so they can both operate quite effectively in the industry.
Todd, financial services, that seems to be, it's got a bit of the Todd Barlow stamp of the really new part of the business that's growing.
Yep.
Obviously, I'd love you to talk us through the Hunter Hall deal, which happened over Christmas last year, which to me, again, just shows the value of the reputation of Soul Patts. Peter Hall choosing to sell to a trusted buyer than perhaps at a higher price to somebody else.
Yeah, I think you raise a really good point about the way that we try to utilise our reputation to the benefit of our shareholders, because we see a lot of opportunities, and that's A, because we're active in the market, but B, because we have the type of capital that is very flexible, and there's not very many of our competitors who would do the type of deals that we do. But in addition to that, there's lots of people who want us to be on their register. They like the way that we're a supportive shareholder, the way that we're long-term, the way that we'll let them get on with their business, and we just pick good managers to run the business, and we're happy to support them with capital along the way if there's growth opportunities. But otherwise, we're quite happy to keep businesses going as they are. And for us, it's more a thematic play. So we picked financial services because we don't see a lot of themes at the moment which are attractively priced. They're either challenged, either from a regulatory perspective or technological perspective, or alternatively, they're not challenged by any of those things and the prices are extremely high. So it's quite difficult for us to deploy funds at the moment, but we still do get the occasional opportunistic transaction where people want us to come and assist them with a transaction or come on their register, whether it's somebody's retiring or wanting to leave for some reason. So we jump at those opportunities. So this was a nice convergence of a great opportunity in an industry that we really like at an attractive price. So when Peter Hall decided that he wanted to retire and wanted to give his shareholding to somebody who was going to be a good custodian, then that worked really well for us. And then we realised that we happened to at the same time be transacting with on the Pengana transaction, and we worked out that there was a really nice fit between those companies. So it all came together really nicely for us.
And so Pengana Capital will be the main vehicle for that sector of the business?
Possibly. I mean, I think it's a great platform for further investment. It's got a really great management team. It's growing really well. It's got really good access into distribution from the planners and things like that. So I think it has lots of opportunities, but we're also interested beyond what Pengana does, and maybe some other niches within the financial services sector. So it doesn't have to be in Pengana, and that's why we've created this concept of the Soul Pattinson financial portfolio or financial services portfolio, where we've got a bunch of LICs and Pengana and Contact, which manages Herb and BKI. So we're trying to sort of create a bit of a portfolio of financial services assets.
It's interesting at a time when the big banks are getting rid of wealth management and funds management. Anything on the horizon there? Some big deals going to be coming up soon?
Yeah, I mean, there's some very big deals, which will probably be a lot bigger than our capacity. And where we see the value is at the smaller end at the moment, where there's not competing capital. And we think that if you can get a few of these smaller things and wrap them up into a bigger company, there'll come a time when the banks will want to come back and own those assets. But in the meantime, we think we can get some really good growth. And the problem with some of the bigger companies, particularly in financial services, is they're not nimble. And this is an environment where the regulation's changing, so post-FOFA and also the way that people consume financial products is changing as well. So you need to be nimble. And so to the extent that we can find those companies that are providing best-of-class services that are fit for the current environment, I think that's where the growth is. Whereas a lot of these bigger companies were set up a long time ago with structures that's going to be very difficult for them to change. And I think that's why the banks are exiting, because they can see that their kind of culture and infrastructure is not going to be able to turn these assets around as easily as somebody else might be able to do.
Okay. I was going to ask you about the banks in a moment, because I know it's held within the portfolio a few banks, but just on the smaller investments within Soul's, maybe Copper Chem, Exco, etc., there are quite a number of smaller investments. Are they adding much value, or is one of those going to be something like an SP Telemedia by buying the NBN Newcastle licence there back in the 80s?
Yeah, and that's exactly the idea, that we like to have our finger in a lot of pies to see. I mean, it's giving us general education about what's happening in the market, but any one of those investments could be the next big thing. So we like to closely monitor what they're doing, and to the extent that they can grow into something more meaningful, we'll happily deploy a lot more capital to them. But that being said, whilst if they don't turn out to be the next big thing, we're getting paid to wait. These are all fundamentally good businesses, and to the extent that they're not, we clean them up and move on. But generally, all of our businesses are profitable and quite good. So it's okay to have a portfolio of them. And as I said, we're not operators of these assets. We're relying on management. So we're just making a financial investment, and for us, it doesn't matter whether that's a big or small company.
Okay, and of listed equities, which comprise a part of the investment portfolio overall, I noticed there are a couple of sales over the last year. LICs, Milton, which has been a long-held one, and some BKI as well. Was that just to make room for some of the financial services?
Exactly, yeah. So, I mean, a lot of our listed equities, there's about $600 or $700 million there, which we just see as our opportunity fund. So it's a liquid portfolio. It's paying us a good dividend. And the idea is that we'll hold that because it's a lot better to have it in the market at the moment than have it in cash. And so we had some big investments this year. So we put $100 million more into TPG, and we also made the financial services investment. So we switched out of a couple of things to fund those.
I mentioned also the API partial sale. Rural Co sold.
Yep.
That's no longer in the portfolio.
No, so we sold out of Ruralco again, to free up some cash, and we saw some better opportunities elsewhere. I think Ruralco's had a bit of a volatile time in the period that we held it, and we just sort of thought that there was more upside in some of the other things that we were doing, and I think financial services in particular, where as I said, we doubled our money. It was a pretty smart job. I mean, you could have sold anything and put it into financial services, and it would have been a good decision.
And Todd, so through the year, a couple of sales of some listed equities. ANZ, Telstra, but you're still holding things like Commonwealth Bank, NAB, Woolworths, Wesfarmers. Is any comments there? Telstra, which we're talked about the telco space, and one of the big banks, ANZ.
Yeah, I mean, ANZ we were a little overweight on because we took up quite a lot of the capital raise that they did about 12, 18 months ago, and so we made some good money on that, and that was only just taking a very short-term view on that stock because of the capital raise price. Telstra, I think is different. We're taking a view that it is going to be challenged by TPG. TPG's entry into the mobile market, as I said before, is going to be very disruptive to the telco sector, and I think all of them will suffer, but certainly Telstra will as well.
And I also noticed you sold Perpetual. That was quite an eventful year with Perpetual.
I mean, unrelated to the court case, of course, but we've been a long-term holder of Perpetual, and I think their share price has performed reasonably well in the last few years, certainly post GFC. And again, we thought that there was more upside in other financial services assets that we were looking at than Perpetual. So it was just a source of liquidity for us.
And a comment on the ending and the successful ending of that long-running court case with Mark Carnegie and Perpetual, and court costs awarded to Sol Brickies. That great result in the end?
Yeah, I mean, it was a difficult and regrettable period. We really only had one shareholder who was agitating for all of those years, and the rest of our shareholders have been extremely supportive for a very long time and continue to be supportive of what we're doing. The view that I always had and the board had and all of our shareholders had was that our cross-shareholding has not only served us well, but continuing to serve us well, because it allows us to make those longer term decisions, and the company's performed extremely well. So it was disappointing to see people challenging that aspect of our structure. But I think one of the things that it did shine a light on was that we were potentially undervalued many years ago. I think we've done some things to rectify that, putting some better information out to the market about how to value our assets, and explaining exactly what we've got a little bit more clearly. But it was a good outcome for us. The fact that the judge went on to say not only that she had dismissed all of Perpetual's allegations, but also that it was clear to her with the evidence in front of her that our board and management had acted very diligently and reasonably and taken the best interests of shareholders into account in doing all of the things that we've done.
The share price correlation between Brickies and Sols is a factor to explain the recent relative weakness in Brickworks selling from Perpetual?
Well, I think the sell down in Brickworks by Perpetual is a little bit behind where it was in Sols. So I think it is creating a little bit of an overhang in Brickworks, whereas the great proportion of Perpetual stock in Sols has already been sold. But potentially that could be explaining why Brickworks is lagging a little bit.
And property, finally, I guess, Todd, 160 Pitt Street. You were looking to go to market. Did anything ever happen there?
We're still interested in looking at options for the property, as we are with all of our assets, not just property assets. We're continually looking at ways that we can enhance value. So we went to market to see what it was worth, and it's a very interesting asset in a very prime location. So it's not an easy decision about what we do, because there's potentially some development opportunities or some leasing opportunities. So it's a more complex asset than some of the other things that we have. So we're weighing it all up at the moment.
Is there a number you've got in mind for that?
There probably is, yeah.
Cagey, but always very confident. Todd, thanks very much for your time today, and congratulations on a great 17 result.
Appreciate it. Thanks for your time.